We sent an unsolicited term sheet to SoftBank.
It is what I would call probably a real gangster founder move, man.
I mean, look at this deal where you have Elevation, Excel, and Newscorp on our side, and on the housing side you have SoftBank, Helion, Nexus, and few more. Everyone sitting in the room, and we were negotiating the deal.
And then basically News Corp said, hey, look, the deal's not happening, so let's forget about it.
Oh, so it was almost going to fall apart.
It had fallen apart.
But it had fallen apart.
The first round of capital we raised was $6 million.
While our first office was in Noida with 25 people, but within the first 12 months, we had offices in all top 8 cities.
Yeah, you guys weren't easy to prepare for, let me tell you.
Hello and welcome to another episode of Ideas to Enterprises. Super excited about this one. We're going to go through the whole journey of Elara Technologies. You may not have heard of Elara, but I guarantee you've heard of their brands. They own and control proptiger.com, housing.com, makan.com, a few more. My guests today are the CEO, Dhruv Agarwala, and the CFO, Vikas Wadhawan. It's really cool to hear their journey, and I'm sure you'll appreciate very quickly why it's so important to have the two of them there together. You're going to hear about the most interesting pivot in Indian startup ecosystem. You're going to hear about SoftBank, Axel, and a bunch of other really storied venture capital firms. You're going to hear about last minute scrambling for a deal, a couple of gangster moves from the founder, and how they took financial planning for a small startup to now the number one digital real estate company in India today. Let's dive right in. Vikas and Dhruv, thank you so much for taking the time to join us today at Ideas to Enterprises. It's an absolute honor and pleasure to have you here today.
Thanks, Zaran. Really appreciate it. Delighted to be on the show.
So today we've got something different happening, something kind of unique. We're hearing not just the story of one of India's most storied proptech firms, but also the story of a relationship of a CEO and a CFO across what is now almost 20 years, Vikas. I think that's going to be quite exciting and quite interesting to get into. The story of Elara, PropTiger, housing, it kind of begins with the story of iTrust. Now, when Tiny Speck had its gaming company and realized very quick that the gaming company was not going much places, but its internal communication tool was taking off, that became Slack. I think we have a very similar story here in India today. And Dhruv, I'd love to hear from you. What was iTrust and what was that insight that led to the pivot?
So look, iTrust, Zaran, was something we conceptualized back in 2006. It was along with my classmate from Harvard Business School, a person called Karthik Verma. So Karthik at that point used to work for a hedge fund in the UK called the Children's Investment Fund. I was with General Electric in India. I used to be the CEO of the infrastructure business, but then I had moved on to a corporate role, which was basically heading the government business for all the GE businesses in India. And we got talking around 2005, Karthik and I, and we said, let's look at doing something together. We said that basically tech businesses are here to stay. Notwithstanding what happened in 2000, that's the time when we had actually gone to business school, and we believed it was a great time to build a business and in India. So we discussed a lot of business ideas, and essentially at some point I told Karthik that look, you got to pack up shop in London and move to India. Otherwise, we can keep talking on the phone and nothing's going to happen. To his credit, within a week of that particular conversation, which was around, and I might be off by a couple of months here or there, around October and November of 2005, Karthik relocated to India. And then over the course of the next several months, we spent time majorly, post work for me at GE and on weekends in his basement, trying to figure out what that might be. Interestingly enough, both of us sort of, came to the conclusion that, financial services would be a good space to build something in. The size of the market obviously was big. And as any economy grows, we know that financial services grows at a multiple of that growth rate. And hence it was a large market, especially given how nascent India was in terms of penetration of various financial products. We believed it was a great market to be in. Second, our own personal experience after I moved back from the US to join GE, and after he moved back, we realized how hard it was to buy the right insurance policy, to make the right investment. And majority of the banks who were trying to sell these products, or even companies which were non banks, the big sort of vested interest they had was to make a high commission,
Mm.
and they weren't necessarily thinking about the consumer's interest. And that prompted us to start basically a financial planning company called iTrust. And part of the reason we chose the name was we wanted to build a business which was trustworthy, and which basically had the consumer's interest at its core. So the idea was to understand an Indian middle class family's financial status, who the income earners were, in terms of how we projected that income to grow, what their current assets were, what their financial goals were, be it in terms of higher education for themselves, or education for the kids, or a big travel that they had planned, or a big car they wanted to buy, or a home they wanted to purchase, or retirement, or whatever that might be. So basically have a 360 view on their finances. And like a company has a P&L statement and a balance sheet, similarly create a similar thing for a family. And then on the back of understanding that those goals and what those reports basically told us, recommend different financial products. The model is essentially to charge for a financial plan, and then whatever commissions we made on selling products, we would transparently share what those numbers were with our consumers. And of course, the whole promise was, look, we're going to give you the best product. We'll share what commission we are making, but there'll be no kickbacks and no passbacks, and no sort of motivation of a passback to actually encourage you to buy a product. We want you to buy a product that's actually good for you, and sort of helps you meet your financial goals. So that was the genesis of iTrust. We got marquee angel investors into the business. Ashish Dhawan, who ran Chris Capital, a few Harvard Business School professors. Plus, we got SoftBank China India to invest in the company. It was quite exciting. We ran it for about 4.5 years, and we very quickly realized that this may or may not, be the best. But that's the time we also met Vikas. Vikas came on board to lead finance for us in 2007, around December of that year, if I remember correctly. And we of course worked super hard, to build out the business. And in 2010, I think we took a call. We were sort of at a crossroads where we could either raise more capital and continue running the business, which frankly was not showing the kind of results we had anticipated starting out. So we had that opportunity to say, okay, let's still give it a shot, or then pivot and do something else. That's the point when we kind of looked at the business closely and realized that one particular product which had a massive pull was real estate, and most Indian families essentially were saving up money to put down an initial down payment on a mortgage, then take the mortgage to buy real estate. Other products such as mutual funds, it's not in today's context, you laugh, but I can tell you at that point in time, even getting people to put money into mutual funds was hard. Today, people are doing day trading, but that time even mutual funds were difficult. Insurance was again not seen as a protection product. It was again seen as an investment product, something which we never believed in. So we told people that, look, given what your goals are, you essentially need to be in term insurance, and for life, buy a basic health insurance and invest in an index fund. That's about what you need to do, depending on how long you want to invest for. And then, of course, have some money in debt. So very, very classical goal-based investment advice is what we were giving. But we realized that everybody was not really sort of in sync with what we were advising, and the biggest pull for people was real estate. So that's the point. From a business standpoint, although our mission we believed was still intact, and that was the right thing to do. And frankly, today, what we had imagined back in 2006 is actually playing out, with lots and lots of financial planning companies, people giving investment advice, people also investing in multiple products. It's all playing out. At that time, I think we were a tad too early. And that's what led us to the pivot where we said, look, let's start out a real estate business, given that that's where the demand is, that's where the maximum pull is. And that's when we sold uh, iTrust to Carvey, which was trying to build out its own wealth management business. And they really liked what we had built. But we retained our real estate piece, and that sort of pivoted into what's now called PropTiger, which was essentially an online brokerage business helping middle class Indians buy real estate, where we would provide end-to-end service all the way from once they came onto our platform, to show them properties, to do all the paperwork, and ultimately help them buy the property. So it was soup to nuts service, and that's sort of how we started our journey into prop tech.
I think one of the most awesome pivot stories there. But what would be interesting is, so Vikas, you're coming in from Grant Thornton, you're joining. It's only iTrust is only a year in its own journey, right? What was going through your mind when we're discussing pivot? What was going through your mind when we're saying, hey, look, we might have to pivot out of the financial model, the financial planning model, and into real estate? And what were you thinking when the whole transaction with Carvey was happening?
So that was very interesting time, Zaran. We were having difficult time scaling the business while we, as Dhruv mentioned, we built great products. We acquired a lot of customers, but revenues were not scaling in line because of the challenges in the market, global financial crisis. So that part was pretty clear that we need to look at some because something of that sort can only make money at a very, very large scale, right?
Mhm.
And that's where that hiving it off to Carvey made a lot of sense. But on the real estate side, uh, I think there was an interesting revelation when we were actually building iTrust that most of the time people were doing investments or doing savings because they want to
Or the purpose of the house.
purpose buy a house or they want to marry their kids. These were two three important reasons, and then we said if that is the primary reason people are saving money for, if we start solving that problem piece, that could be probably a much bigger opportunity and help us solve a much bigger problem. So that's what was going on. But frankly, for me as an individual, what was going in my mind was, should I join this PropTiger thing as part of the real estate journey? And we had a couple of discussions between me and Dhruv, and Dhruv did a lot of convincing at that point in time. That no, this makes a lot of sense for you as an individual in terms of the role which we are looking at, how you're going to play, because this is an unorganized sector. We need a strong person who can lead the finance risk part of the business. And that's where I got convinced eventually and took this opportunity. And then there was no looking back. The journey was really off.
And look, because in all fairness, the data points were there, right? I mean, if you look at it, I think that was what really prompted us, because there was a big debate even amongst us whether we should do it at all or not,
Yeah.
and move into something totally different, go back to the whiteboard. But we said, seldom would one get the opportunity to actually do sort of real market research, right? Over an extended period of time with real customers and real data, as opposed to just asking questions. And it was pretty clear in our minds that real estate was the place to go to, because that pull was immense. And people were looking at it from all perspectives. We realized that people who didn't own a home wanted to own their first home. People who even had a home wanted to buy a second home as an investment. And hence, I guess we said, look, let's go to real estate, because we believe that real estate was something which, if you looked at the secular trend, home ownership penetration, mortgage penetration, etc., that this was an asset class which would naturally do well. As more and more people got wealthier, there would be more sort of migration or urbanization happening. Migration from to the small towns to the big towns, urbanization happening, etc., etc. We believed it was again a big enough space to play, enough problems in there to solve, and hence I think we made the pivot.
I think, like I said, one of the most storied pivots in the ecosystem. Dhruv, while we're still in the iTrust era, I can't help myself but ask, right? You mentioned you had Ashish Dhawan on the cap table, legendary investor.
as far as I can tell, this is one of the earliest, if not the earliest, SoftBank China pre-seed rounds in the country. Horizon also comes on board. Could you just, for the sake of everyone listening, paint us a picture of 2006? How did you raise that pre-seed round? What was the process? I'm assuming a lot of travel was involved. How did that go? And I think this is before SEF gets involved, right?
That's right. So even Horizon came in, when we had made the pivot. Even SEF, which is now Elevation, also came in into PropTiger, and so did Axel come into PropTiger. The institutional investors we had in iTrust was SoftBank China India, and we had a financial services hedge fund in the UK called Algebris, which basically came in. So the founder of Algebris was somebody who had worked alongside Karthik at the Children's Investment Fund. So there was some familiarity and there was an understanding of the founding team, at least, or one person in the founding team, which I think helped. I personally knew also one of the founders of SoftBank China India. So I think that gave real comfort to both these institutions, to invest in us at such an early stage. We basically had barely started off, and they had and we convinced them to put money into us in an ecosystem where there were very few deals which were happening. So I mean, today it seems ordinary what we are saying. At that point in time, it was a challenge.
Yeah.
2006. And that too, the first round of capital we raised was $6 million. Uh, so it was $6 million for in today's parlance, you would call it a pre-seed round. And that's exactly what it was. And we were pretty clear that we're going to raise only six and not lower than six. We had two term sheets from actually two good friends as well. At that time, the ecosystem was so small, every investor out there was a friend, actually. We had two other term sheets, but for 2 million each. Very good investors again, but we decided not to take it because between Algebris and SoftBank China India and Ashish and a few other angels, we were able to get to the 6 million round. So I think at that point in time, what we relied on, Zaran, to answer your question, was a lot of our past credibility to raise this capital. Obviously, Karthik had had a stellar career as a hedge fund manager. I had run a P&L for GE, was heading at some point it headed the infrastructure business here. Then was heading all of government sales for all the GE businesses. And plus, my stint with GE in the US had been very successful. I'd done a startup in the past before, of course, in a very different sector, but I'd had entrepreneurial experience. So I think our pedigree and our backgrounds and our relationships with investors, to be honest, I think was the big sort of driver of why we managed to raise that 6 million as a pre-seed round back in 2006 for an idea which was fairly unproven. There was a lot of pushback, a lot of questions, a lot of unanswered questions. And we said, look, at the end of the day, venture capital is all about trying to do stuff which has not been done before and to answer some questions which will obviously remain unanswered till you don't actually go out and do it. So, to the credit of our investors, they did make that leap of faith, put the money into us. We worked really hard at trying to scale the model. And when things didn't pan out as we would have liked, we still gave all of our investors a stake in the new business as a bit of a compensation for not doing very well. When the exit to Carvey happened.
What I find really cool is that the more things change, the more they stay the same. I mean, fast forward 20 years, and I think most founders would kill for a cap table in a pre-seed round like that. Uh, so that's very interesting. Now, 2010 PropTiger is set up. How did you, Vikas, Karthik, the other co-founder, how did you all figure out how do we get this baby off the ground? Business model wise, this might even be seen as a network effect business where you need enough customers to entice the developers, enough developers to entice the customers. What were the first few years like PropTiger like for you, Dhruv and Vikas?
But actually, in 2010, we had been introduced to our third co-founder in PropTiger, Prashan Agarwal, by one of our common friends. It was actually somebody who was at Safe Partners, one of the investors there. And, he was Prashan's classmate at IIT Kanpur and maybe even at ISB, I can't remember now, but definitely at IIT Kanpur. And he knew us as well. So he made the intro, and essentially Prashan used to work at InfoEdge and was running one of their businesses called All Check Deals, which was essentially an online brokerage for real estate. Absolute pioneers for this particular industry. Although today everybody's forgotten and they believe that PropTiger is the pioneer. I'll take that credit, but I do have to give credit where it's due. So it was All Check Deals. Prashan was running that, and he sort of reached out to us saying that, hey, look, there seems to be a bit of a disconnect in terms of the vision for All Check Deals. And he would like to sort of, come to iTrust and start a similar business within iTrust. Um, and at that point in time, we obviously had to say no, because we said that, look, iTrust has already taken off. There's a certain cap table to bring somebody else on board. We couldn't sort of meet his sort of expectations from what that could look like. But then in 2000 and towards the end of 2010, when we had sort of taken the call of exiting the business at almost, actually we had agreed on the deal with Carby. I think the documentation, closing, etc., took another few months. We actually closed around the end of January, if I remember correctly, in 2011. But by then we had spoken to Prashan. I mean, I reached out to Prashan again saying, hey, look, now we are moving out of iTrust. We're selling the business. We're moving into real estate. So this is the time when, you can actually come on board, and it'll be easier for you to come on board as a co-founder. So that's when he joined us, and we decided to start PropTiger together, Karthik, Prashan, and I. Um, Prashan obviously, came from his own experience at All Check Deals. We at iTrust were also selling real estate as a product amongst many others, because of the fact that we were doing holistic financial planning and helping our customers buy those products. So because of that, we all of us came from extensive experience in the sector, and hence getting things off the ground was less challenging for us. We had folks who were there at iTrust who we could bring on to the new venture. There were folks who Prashan had worked with at All Check Deals who also wanted to move. And so we were able to build a team very, very quickly and get things off the ground very fast, because we came from our own prior experiences in the sector.
Because the heat must have been on for you, because you're leading finance and we've just come out of this pivot and we're getting into this new model, a lot of further question marks and some great investors. What was going on in the first couple of years? How did you think through the business then?
Yeah. So I think the first couple of years was a roller coaster ride, Zaran. Not only in terms of learning and understanding the business, because at iTrust, while real estate was a product, but we were doing it in a very limited manner, and we were doing it through other channel partners in the market, because we were focused on our financial products and the business, the core business. So real estate was not the core focus at that point in time. So I think the first couple of years were a lot more understanding how the landscape looks like, who are the customers we want to deal with. Customers, when we say, is developer partners, because they are the ones who are paying us, and we were helping the buyers to buy the home from the developers. So understanding that landscape, understanding the credit profile, and in fact the lay of the land, because the market was very, very unorganized way back, right? And while this was on the one side, we were learning and understanding the business. On the other side, because there was a boom in the market between 2010 to 2013 in real estate, and everything was selling like a hotcake. So we wanted to obviously ride that growth and grow our business. So there was a huge pressure in terms of expanding the team, expanding our geographical presence. I remember in the very first year when we started our journey, while our first office was in Noida with 25 people, but within the first 12 months, we had offices in all top 8 cities, with approximately 350 to 400 people. So that's the kind of what you call, we were running on steroids, right? And running really, really fast. But very quickly we realized that we need to select who our right customer base is, who we want to deal with, because being the market being very unorganized, there were massive credit risk in the market. So how do you keep track of which developer you want to work with, what are the credit terms, and so on and so forth, was a lot of focus at that point in time. And parallelly working with our technology team to build our own internal CRMs, because those kind of products were not available in the market at that point in time. So we started building our own CRM because the life cycle from booking to realization of cash was pretty long. Unless you have your own internal tracking system, it's hard to kind of keep a track of every transaction which is getting billed in multiple tranches to the developer. How do you have that internal system in place? So I think, in a nutshell, learning the market or learning the lay of the land, growing very, very fast, and setting up a risk and a internal system were two, three broad categories where my time was going in, or I was spending a lot of time and energy in the early couple of years when we did this pivot.
But I also must give credit to our investors again, who invested in us in iTrust, because we managed to get SoftBank to write another check for this one. That's the time when Horizon, so one of the partners at SoftBank, also had a smaller fund called Horizon. He got Horizon to put in money. Ashish came back with a small check. One of our other investors, Sid Yog, who used to run Xander, was there in iTrust as well. Sid also he wrote a fairly largest check, in PropTiger, because he was in real estate and it was easier to convince him. But the fact is that all of them, or a lot of them, came back. Algebris, of course, did not, because they were a financial services hedge fund. So this really didn't meet their mandate. And they were pretty cool, saying, "Hey, look, didn't work out well. It's okay." And we did give them the equity, as I mentioned to you, in this entity as well. So the investors backed us, and we started a conversation with Axel, if I remember correctly, around June or July of 2006. And by 2007 February, they had put in capital into the business, which was a fairly large round. If I remember correctly, it was about $5 million. And they also pulled in Elevation at that point in time. And because we were already talking to and I actually can't remember who pulled in who.
It's vice
maybe an early
versa,
round. But
But yeah,
yeah, so it was Elevation who pulled in Axel. We had a
elevation of pulled in.
conversation with Axel.
Was it a chain? Did SoftBank pull in Elevation? Elevation pull in?
No. I think that was independent. But actually, we started speaking to Prashant at Axel around May or June. He wasn't particularly, I think, excited at that point in time. But then when Elevation decided to write the check, that time Seth, then Axel came on board. So Elevation was the senior partner in terms of the amount of capital they put in, and Axel was sort of following on a little bit. But Ravi from Saif and Prashant from Axel came onto our board, and I can't even tell you how valuable that has been for us. That they are sort of the main drivers. One of the main, I mean, Ravi for Saif and Elevation for sure, at least in the early days. And Prashant, along with Sobrito, was sort of, again, a big driver of Axel. So to have Ravi and Prashant on our board was extremely valuable. Um, that sort of was, I have to say that the ability for us to scale so quickly and to hire the number of people, Vikas mentioned, in such a short span of time, was driven by the fact that we had access to capital, notwithstanding the fact that iTrust didn't go off too well. But people recognized that we did the right things, we had the right intent, we had learned from our mistakes, etc., and hence they were willing to back us again. And which is why it's always nice to be a second time, third time founder, because people do appreciate the fact that you've learned from your mistakes and that you repeat them as you move forward.
So the cap table gets even more enviable. The board gets stronger, and we start seeing solid scale. I'm super curious, in that period of time. I think it's true today as well, but back then even more so. The home is a very high intent, high involvement purchase decision. So there is obviously a large potential of conversion offline rather than online. How did we work this out? How did we get people online, and what strategies did we implement to start getting them to convert offline?
Look, I can quickly, sort of come in here, and then Vikas, can jump in and add to that. Uh, Look, I think fundamentally, as you observed, right, a home is probably the most expensive purchase an average family would make in their lifetimes, right? It's one of those products which they would buy at most, once, or maybe they'll probably buy once or at most two times, right? It's one of those decisions where the cost of going wrong is very high, right? You can't reverse it easily. You can order a pair of trousers on Flipkart, and if you don't like it, you can return it, or even if you can't return it, it's still a pair of trousers, right? The cost of a wrong decision is not that high. But a home, you can't just buy it and then say, "Oh, I don't like it, I'm going to return it." And if you can't return it, which is obvious, the cost of undoing that transaction can be very, very expensive because there are high transaction costs. So that's a big problem. So that's why people are very, very conscious about when they buy that make that purchase decision. It's highly emotionally charged. People are extremely nervous. There's massive information asymmetry because what developers know, what brokers know, what everybody else knows about this space, the consumer just doesn't know because they're not in the market. They're there only when they want to buy, so they don't have expertise. Uh, Very little institutional memory because not too many people at that point in time had bought homes, right? So everybody was still learning. Plus, it's never an individual decision. People would involve their parents, their in-laws, spouse would get involved. If they had kids, they also wanted kids to visit. So it was very, very complex, right? Plus, it's a place you're going to stay in. So you wanted to visit it in the morning to see what it looked like, in the evening to see if it wasn't sort of too quiet or felt unsafe, how the traffic was, what the light looked like, various things, right? Because people are also very particular about if the apartment is going to be breezy, this, that, and the other. With new homes, it is a bigger challenge because you're simply buying off plan. So there was nothing on the ground. So they still wanted to go and visit the neighborhood, understand what was coming in the area, how the connectivity would be. In many instances, developments were being launched in areas where even road connectivity was extremely poor. So people were not going to buy just on the back of what they saw online. The visit was absolutely a must. And therefore, we recognized very early on that the purpose of having an online platform was to basically try and reduce the information asymmetry as far as possible. So, provide as much information as we could to make the consumer more intelligent, more knowledgeable about the big purchase, which then would remove a little bit of the anxiety of going wrong. They would be armed with the knowledge to ask better questions of the developer and the broker, whoever they wanted to talk to. Of course, in this case, we were the broker, but still allow them to ask us more intelligent questions. Second thing was to also reduce the cognitive load of having to go visit 20 different places, right? After a while, everything starts to look the same. So the idea was, can we provide them enough information, enough photographs, enough data points to at least arrive at a short list online, right? So you can at least say, okay, I've looked at 20 online. These 15 I can discard on the basis of some very basic things. Let's shortlist 3 to 5, and then I can go visit and make that decision. Plus, the amount of time you have to invest also goes down significantly if you can shortlist online and then go and make a few site visits as opposed to visiting 20 different properties. So the idea was to begin so the recognition was there upfront that it is going to be a combination of online and offline, and not just online. And frankly, even today, if you would like to buy a property online, it's not possible. You have to go offline. So may as well invest that extra time to actually evaluate it before you pull the trigger. So the business was designed with that thought in mind, that it's going to be an online to offline, and how to make that process as seamless as possible was one of the things we needed to focus on. Uh, we also wanted to ensure that the consumer experience, which was easier to manage online, that sort of translated or moved forward into the offline experience as well, but there was lesser control, there was more variability because there were people involved, etc. how to kind of ensure that top-notch consumer experience we were promising was felt by the consumer all through the journey, not just the online piece, but the offline piece. A non-trivial problem, but that's sort of how we thought about it. So it wasn't like we suddenly realized it's online to offline. We kind of knew it was going to happen.
I like the insight of reducing information asymmetry as much as possible. Is that what led to the acquisition of a VR company?
That's right. Absolutely right. The idea, we acquired two different VR companies. The idea was, how do we showcase the property in a much more immersive fashion digitally, so that people could make those shortlists and get the information they wanted in the comfort of their homes, or even if they went to a developer's site. Basically, the developer we were selling those tools to the developer as well, so they could showcase their property in a sort of digital environment, in a manner which would make it easy for the consumers to absorb information. So there was very, very interactive Microsoft Surface kind of tool, where people could engage with the off-plan property, because there was no real property on the ground, and whatever stuff they shortlisted, they saw. The salesperson could, create a PDF file and then, ship it to the consumer.
So, because this is the first in the string of what becomes a number of acquisitions. What is going on in your mind? Because, like we just said, you're in the heat is on, you're leading finance, and now we are talking about using precious funds to acquire other companies. How are you handling these conversations? Was there ever any friction around this? Paint us a picture of that time and how it was working.
No, first, let me add a bit of color on why did we acquire those VR companies. See, if you go back in 2011, 12, 13, how the off-plan or the under construction properties were sold were you were shown physical brochures, right? And showcasing how your apartment will gonna look like, how that entire condominium will gonna look like. And at max, one type of sample flat which is built by the developer, obviously a very high-end sample flat, which most of the time is far from the reality, because developer can invest a lot of money in a flat because that's a show flat, right? So why did we acquire VR companies? We said the developer can create a sample flat for one particular configuration, but a condominium may have 5 or 6 different configurations at the least. So how do we kind of show it to the customer that what different type of configurations exist and what does it mean in terms of if you end up buying a 2 BHK 1100 square feet versus 2 BHK 1500 square feet, right? So that's the kind of experience which we wanted to extend, and that was the discussion we always had whenever we did an acquisition. That why do we want to do the acquisition? It was never that, oh, we have this opportunity on the table, then let's just go ahead and do retrofitting of rationale and then see how we can acquire the deal or how we can acquire that company, make the deal happen. But it was all about why do we want to buy a company or buy a product and then go after that and make that deal. Frictions are bound to happen because we as individuals have our different perspectives, and I think we need to discuss those perspectives. We need to be respectful of each perspective, and that's how we used to have those discussions. And after all the discussions and debates, we used to come to one common ground, which may be someone's perspective, right? It can't be everyone's perspective. We'll come to one common ground and then we'll rally after that. In fact, between me and Dhruv, we had a lot of different views in some of these discussions. But I think thanks to Dhruv, the way we kind of had an equation in terms of we always used to have a pre-meeting that this is what I'm thinking. Dhruv used to share this is what he's thinking. We will align, disagree and align then finally, and then we walk into the meeting. And I think that worked well for us through this journey.
I think the meeting before the meeting is something that we do here at Biome as well. I want to fast forward to 2014 because I think the 14, 15, 16 era is like super heady for Elara. Let's set the stage a little bit for the people listening in. Around this time, REA is starting to kick in. 99 acres raises this massive QIP through Naukri, through Info Edge, sorry. MagicBricks has continued to really ride on the Times ka distribution. Housing.com suddenly comes up with a massive round. I think it was a 90 million, and you share a common investor. So suddenly the market starts to look shaken up. Do you recall during those days, how did we try to stand out? How does PropTiger, this is before all the acquisitions start happening. How do we manage such a situation?
We were very clear when we were starting out PropTiger that we wanted to be in the brokerage space. 99 acres existed at that point in time. So did MagicBricks, so did Common Flow, so did India Property, and maybe even a few more. I can't remember. But the fact is that there were a lot of people in the classified space, um, and we felt that a big problem in the sector was when people were actually on the ground, making those site visits, trying to identify the right property, etc., etc. There was a massive mistrust of the broker at that point. I think to a large extent, that has been resolved today. Still, mistrust exists in pockets, but I think at that time there was massive mistrust, and hence we felt the room for a trusted, well recognized, pedigreed broker was there. So we were very clear that we wanted to be an online broker as opposed to being a classifieds platform. We felt that the money which was being spent by housing or the money which was being spent by 99 acres on marketing, branding, etc., would only help the real estate or the digital real estate ecosystem, and would benefit players like us because we were advertising on all these three platforms as well. In addition to proptiger.com for customer acquisition, we also had listings on these three platforms. So in a way, we saw them as complementary to what we were doing and not sort of antagonistic to what we were doing. Yes, where I think there was competition for capital, right? Because if suddenly there's a lot of capital which goes into housing or into common floor, 99 of course did not need it. They had access through public markets to be able to raise it, and Magic of course had the Times Group. I think what it did with all of this noise happening was it became hyper competitive for capital in this space, and that's what sort of worried me as opposed to what these players were doing individually. Uh, we used to have. I still remember having a conversation with housing even before we acquired the company, and before things sort of went a little awry for them. Ways of partnering together. And I remember meeting Rahul at that point in time as well. But we really couldn't arrive at a structure which would work for both sides, and hence it never happened. But we always realized, they as well and we as well, that there's a complementarity between the two businesses and not sort of direct competition. So we weren't too concerned about that. We knew that we had SAF and Axel on a cap table along with SoftBank China India. So we felt that there was access to ongoing capital. I think we got a little worried when SoftBank did put money into housing, and but of course through a very different pocket. It came from a different fund of theirs. Then it was very clear that, look, they made a bigger bet on a platform business as opposed to a brokerage business, so that might hinder our ability to raise capital from them. But look, I mean, for every founder, capital raising is as important as executing on the business. And we ensured that at every point in time, we continued to have conversations with investors and our existing investors, new investors, potential investors, so that at the time we needed the capital, we would have it. So I think, to sum it up, yes, there was a worry, obviously, but there was no sort of sense of panic.
You know what's interesting
In
to
fact,
me? Yeah, go ahead, Vikas.
just to add, in fact, that's the time when the new homes market started kind of coming for a decline in 2013, because 2010, 11, 12, we saw the kind of sales happening in India. Frankly, we've not touched back those numbers even today. I remember in one particular year, there was more than a million home sale or close to a million home sale in one particular year, in either 2011 or 2012, if I'm not mistaken. 2013 onwards.
12, 13, that particular financial year. Yeah.
Yeah, and that's when the market started coming for a decline, because a lot of sales were happening, but the construction or the execution of the project could not keep the pace, and that's which was our core business, because we were selling only new homes, and that market started struggling. So while yes, the platform businesses were raising capital, we were having a decent amount of capital still in our bank account. So we were focused on how do we deal with this downturn and continue to build our business more efficiently during this downturn, because most of the great businesses are built during downturn, right? So that's where a lot of focus went in during that time. While, as Dhruv said, we were trying to figure out what could be a partnership model with some of the platform businesses.
That's the one that is really interesting to me, because the perception is that things go off the rails at housing. PropTiger swoops in and gets an asset at an attractive price. But what I'm learning from you, Dhruv, is that these conversations are already happening well in advance, or well before this had sort of happened. So that is something interesting for us to learn today.
Yeah, so look, it wasn't per se, discussion around acquisition or whatever, but yes, I think we did have discussions around how we could collaborate and cooperate. And it was always sort of, I think it became a little bit more, I would say, tangible, when News Corp came on board in 2014. I guess that's the time when even housing realized that we had an investor who was a behemoth and a strategic, and there was a potential for them to also invest in housing or do something together, or there was the opportunity of creating a platform. Uh, but then, of course, by the time things could have moved forward in that direction, things, as I said, went a little topsy turvy at housing for their internal reasons, and then we came in much later. So if you recall, the housing deal was done in 2017, and prior to that, we'd already acquired Makan in 2015. But yes, there was always this understanding that the two platforms, uh, possibly could work together, and if they could work together, then yes, there was a natural potential progression to actually being housed in the same corporate structure as well.
Fascinating. Now, Vikas, you mentioned that we were trying to make things efficient, but I'm assuming the temptation, or at least the push, was that look at some of the other players in the prop tech, digital real estate market. They have large budgets burnt on marketing. A lot of branding is taking place. How did you actually manage efficiency? So you're saying we managed it efficiently, but educate us a little bit on how that happened or what you did.
I think large players, obviously, because they raised capital, they had their own reasons to spend that money. But I think internally we were very clear that we will, yes, growth is important, but we're not going to chase growth, and which turns into a reckless cash burn, right? And there was alignment internally, so that made my job a bit easier. But nonetheless, I was focused on not only making sure that we spend cash efficiently, but also there was a lot of focus. As I said, this entire industry was very unorganized, and the cycle from order to cash or from booking to cash was pretty long. So my focus was how do we kind of reduce that cycle, convert that booking into cash faster, so that we are not only growing top line, but we are growing top line cash efficiently. Because otherwise, you need boatloads of money, and you continue to run on a treadmill of raising more and more capital as you continue to grow the business, because your working capital requirement in the business keeps growing, right? So that was a big focus. Our strategic priorities was from a unit economics perspective, this business was always positive, right? Because every salesperson could make top line, could make revenues which are much higher than the cost of the salesperson and the cost of acquiring that customer. So from a unit economics perspective, it was working well, but from a cash economics perspective or the cash cycle perspective, that's where a lot of focus was needed. Thankfully, we were not chasing GMV and GTV with a very clear intent that we're not going to chase that vanity metric. So there was a lot of focus on driving efficiency in some of these areas.
Dhruv, you mentioned News Corp. Now, you had such a strong cap table, and people are looking at this market a lot in India. So the temptation or the natural thing to do is obviously try and raise more from there. Could you tell us the story of how Rupert Murdoch's News Corp came onto the cap table of PropTiger?
So look, that's a very interesting story because we didn't even have them on our radar
Exactly.
as a potential investor. It wasn't that we did an outreach or we, were working with a banker. Again, we've never used a banker ever to raise capital. So, yeah, as I mentioned, a lot of the investors were our friends. So it was always, one degree of separation. You reach out to someone, get connected, and that's how things happened. But in this case, there was absolutely not even a thought in our mind to go to News Corp. I think there was an inbound interest from News Corp. If I again were to look back, I think it was probably around the April, May timeframe in 2014 that they reached out to us. And interestingly enough, the outreach happened, from two different levels. One of the partners at Axel at that point in time, Jim Breyer, used to be on the board of News Corp. So they must have had some discussion about expanding into India. And he must have said that, hey, look, we should talk to Axel in India to see if there are any potential companies News Corp would talk to. So they reached out through Axel, and because Axel was an investor in our business, and then during our iTrust days, I remember we used to write a lot of articles for the Mint on personal finance. So at that point in time, the Mint's editor used to be someone called Raju Narisetti. He was the founding editor for Mint in India. One of the folks on Raju's team who we used to closely work with, I think Raju, by then Raju had moved on to News Corp actually. Raju reached out to him saying, hey, could we connect with those folks who used to work with us, right? Apparently they've started a real estate business now. So anyways, the connects happened, and we met with Raju Narisetti in Delhi, and at that time he was running, I think, business development, global business development for News Corp, for the digital businesses. So we had a meeting with him. I still remember when we met him. I remember it was the Radisson on NH8. Around June 6th was, I think, the day. I first questioned out of my mouth were that, Raju, I think, you might be in the wrong meeting. So his response was, that's leave that to me to decide. But I guess the point I was making was that, look, we are an online brokerage. Obviously, when News Corp reached out to us, we did some background work, and we realized that they had an investment in an REA. And not an investment, they actually were majority owners. And that there could be some angle there. But REA was a traditional, what you would call a classifieds type of business, right? Listings business. So we said, look, we're a brokerage, you have common floor, you have housing, you have 99, you have Magic, but we don't do any of that, right? So we were very upfront. Plus, that was also the time when Karthik, my co-founder, he had decided to move on and move back to England, for personal reasons. He wanted to go back into the hedge fund world. So we were very upfront. One about, hey, we are not doing the kind of business you'd be interested in. And oh, by the way, one of our co-founders is actually leaving, right? So Raju was quite unfazed by both. He said, look, let's have the conversation. I know why we are here. Again, I think, he was pretty direct to us, saying that I think what attracts us the most about this business, again, is the pedigree of the founders. We think it'll be much easier for us to work with you guys than maybe with some of the others. And then, of course, 99 and Magic were like already very big and maybe not the best targets for them at that point in time. So, it happened all very quickly. We had the first conversation on June 6th. I think I remember on June 30th, I was there, presenting in New York to Raju, their head of M&A, a couple more other folks. I think the following day, I met with Robert Thompson, who was the CEO, and their CFO and their CTO. And I got a call within an hour of that meeting saying, hey, Robert likes what he's heard, and we're going to give you a term sheet. And we did get a term sheet at that point in time, almost for, I think the number was $30 million, a fairly large check. And we were all sort of, super thrilled because it came out of the blue. And the speed at which it happened was incredible. And, so we got the term sheet, I remember, around the 5th or 6th of July. And the first week of August, they had the diligence team on the ground. And I think, things were looking like, yes, we are on our way.
Vikas, what was that diligence week like? You got the News Corp team sitting in your office, going through everything. What was that? What was that time period like?
So that diligence was a tough one for us, Jaran. It was a great learning because so thankfully I think one thing was because we got institutional investor not only in PropTiger but also in iTrust. So we were always focused on our internal governance, our records, our bookkeeping. Most of these things was sorted, so to say. But still, I think the News Corp diligence was very different. Their focus on understanding the commercials, the commercial diligence. They were less focused on accounting. Yes, they got involved into accounting because of being a very large media company. So they wanted to ensure a lot of things on the accounting side as well. But their commercial diligence was a lot more deeper, and that gave us a lot of learning in terms of how should we prepare for diligence, how should we when you're dealing with strategic investors, what do they typically ask for? Because they are looking at the business from a much longer vision or a tenure to stay invested in the business rather than comparatively a financial investor. Their lens is slightly different. So that diligence was pretty good, and I think their M&A team was very sharp, and we had a lot of interesting conversation during the diligence, whatever observation they had, and they grilled us really well on most of these questions. So it was good learning for all of us.
So what is it like? How does it play out when you have up until then the hedge fund notwithstanding, you had mostly financial backers. Now in comes a strategic. Did that change the tenor of the boardroom? Did that change? Do they have like differing priorities? What was that like, Dhruv?
The interesting part is, when news did come on board, one thing which I think we all recognized and realized, including our financial backers as well as us, that they are in this, for the long haul. Um, Within, I would say, I think, in fact, just before the deal closed, we also saw that REA in Australia had taken a significant minority in iProperty in Southeast Asia. That happened the same year, actually. So the penny dropped for us very quickly that this wasn't just an accidental outreach to us and that they liked us and they put money into us. I think it was part of a larger global design to have a global play in digital real estate. I think later that year, again, the announcement, I think, would have happened just at the time of our deal or after, was they also announced the acquisition of Realtor.com. So which was, I think, a number two player to Zillow in the US in the same space. So we realized that this is a much bigger thing happening, where they've taken a strategic stake in Southeast Asia. They've bought a stake in us. They bought Realtor.com. They already own REA. They were trying to build out a global play in digital real estate. And then, as we dug deep as well into their financials ourselves, we realized that a large chunk of their revenues and EBITDA was coming from digital real estate businesses as they were consolidating their holdings there. So we knew how important it was for News Corp in terms of this particular investment. And we also realized, including our financial investors, that they would be in this for the long term, and that at some point in time, they would ultimately acquire the business. Because when a strategic comes in, the end game is always to consolidate. It is not just to keep it as a side pocket financial investment. So I think that's when I think there was a clear focus amongst all of us that, look, we got to let news sort of drive the ship forward and work with them a lot more closely so that we could align with their priorities. Because we all recognize that aligning with their priorities made overall sense for the business, as well as for the financial investors, as well as for the founders. So I think there wasn't any disconnect there at all. And of course, the priorities were different in the sense that news, would have held this forever. The financial investors would want to exit at a particular point in time. And that particular point in time, when that would it align with news's interests? Would it align with the financial investors' interest? That was always a matter to be discussed. But other than that, I think we were all very clear, who sort of was the main driver, in our board discussions in terms of strategy and other things.
I remember as a young entrepreneur in Kuala Lumpur myself when the iProperty investment happened, and I was green with envy as I was raising my own round. But this sets us up perfectly now, Dhruv and Vikas, for the large acquisition. The Baka not only happens, Aditya is a wonderful person, dear friend of mine, in fact, from back in the day. But I'd love to talk about the housing acquisition. What was the mood in the boardroom? We just told news that we don't do classifieds, and here comes housing as a potential acquisition. You have SoftBank, who's obviously trying to figure out what to do with the asset. So one is the rationale. Would love to understand the rationale for the acquisition. I'm sure the brand played a large part of that. But then the other is, what were the internal debates? How did that conversation play out on whether or not we should do it?
Zaran, before we go there, I think the a bit more context needs to be added here. Post News came on board as an investor in 2015, May 2015, we acquired Makan
Yes.
to bring in the classified play into the mix. So basically, at that point in time, we were an online brokerage business. We bought a classified portal. So we were trying to build that. We coined the term as O2O, online to offline in real estate ecosystem, and we said we're going to build this platform where because there was a clear identification in our that real estate journey. It's not very clearly verticalized between someone who is buying a new home versus someone who is buying a resale, and obviously rental. The renter eventually will move into buying a home, but that primary versus or new home versus secondary or resale was always there was a lot of overlap. And we said, can we actually go slightly up in the funnel and have a classified portal so that we can service the customer in new homes market, service the customer in resale market and in rental market. And that was the reason we acquired Makan. And that added a lot of context when we actually, within a year's time, brought in housing deals. So Dhruv, over to you to answer, Zara.
No, so look, I think it's a very important point Vikas makes. We realized very quickly with PropTiger that we were getting customers at the bottom of the funnel. Customers who had sort of been through a journey for almost 6 months, firstly deciding whether they want to rent a home or buy a home. If they decided to buy a home, whether they wanted to buy a new home or a resale home, and PropTiger was playing only in the new homes market. Uh, so we were missing out on all of that, right? Engaging with the customer for a period of time. And when it came down to the bottom of the funnel, we were also competing with a lot of mom and pop brokers because at the end of the day, you're buying a property from a developer. There's only so much PropTiger can do different from another broker. If the developer is good, then it goes all well for the customer, even if the broker is somebody else. If the developer is not good, then whether it's PropTiger or somebody else, the outcome is going to be the same. So we realized that. So we wanted to ensure that we're getting consumers at the top end of the funnel. We could work with them for a period of time to help them actually make that purchase decision, and help them as they make these different decisions: buy versus rent, new home versus resale, etc. And for that, we realized that PropTiger was on the right platform because we just didn't have those listings. We didn't have rental listings. We didn't have resale listings. So to suddenly, pivot into that would have meant a lot of investment and a lot of distraction for the core PropTiger business. So we felt that acquiring a platform was the way to go. Frankly, when we acquired Makan, that was probably one of the assets which was available. We got it at a reasonable valuation. Uh, but we realized very quickly after acquiring it that a lot of work needed to be done there, because the platform had been underinvested in for a while, and it would require a lot of investment for us, not just in terms of the platform but also in terms of the brand. Now, the name was top notch, Makan.com. You can't beat that name. A lot hadn't been spent, and 99 Acres and Magic had always outspent it in terms of brand spend. So once we had Makan about a year and a half, we realized a lot of work needed to be done. But then I think secretly, whether it was News Corp or us, we aspired to buy housing because when things started going southwards at housing in I think 2015, we felt there might be an opportunity. And given that SoftBank was still part of our cap table in some form or fashion, and also there could be a marriage, which could be orchestrated. So we were quite hopeful. But then, interestingly enough, they reached out to us, and they said that, look, SoftBank did, and said that this could be a good fit. So why don't we explore this? And that was very interesting, because the initial conversation actually happened in around 2015 October. By the time the deal got concluded, it was 2017 January. And there are like, we could spend about 10 hours on a separate podcast to discuss what transpired in these 15 months. But there was a lot of moving parts and a lot of work which needed to be done to get this over the edge.
What was one memorable moving part in that period, just so that we get a flavor of what was going on in those 15 months?
Maybe I can share a couple. Won't share too many details. But look, I think I visited Japan in October of 2015, literally on a day's notice. Then SoftBank visited us in November of 2015. They said, look, we like your setup. We think there's a deal to happen. Then, of course, holidays happened and stuff. Vikas and I, along with the News Corp M&A team, Raju, who's leading BD, we showed up in San Carlos at the SoftBank International Headquarters. I think around February, late February, early February, 2016. The then CEO of Housing.com was there as well. We had a good meeting. We agreed that this is something that we should do, but we just couldn't agree on the merger ratio. We couldn't just agree on who would be the leader of the business. Many of those things were undecided. And then basically News Corp said, hey, look, the deal's not happening, so let's forget about it.
Oh, so it was almost going to fall apart.
It had fallen apart.
But it had fallen apart.
Yeah. And I was unhappy about it. I felt that housing could be that game changer, because we realized that we were not making a lot of headway with Makaan. At that point in time, I kept pushing Raju, why don't we do it? And he's like, look, Dhruv, I'm beginning to feel that you don't have confidence in your own ability to run Makaan. I said, look, that's not the case. I just feel that housing would be a much simpler path to get into the end game we are all aspiring for.
Full stack. Yeah.
No, not full stack. It is just a better brand. The product was better on all fronts. They were well ahead of Makaan at that point in time. So we felt it was just a better asset to kind of use, to work with, to aspire our dream of this, what you said, the full stack, end to end, having a classifieds and a brokerage play. But, we just didn't do it. And I kept in touch with the housing CEO at that point in time, Jason Kothari.
Yeah,
Rahul had left by then, just kept the plate warm. But Jason said, look, Dhruv, we don't have time. I'd love to do it with you, but we have to get things done. And there are lots of other suitors. So, either you pull the trigger or nothing's going to happen. And to be honest, nothing really happened, right? Then one fine day, I said that, look, we got to do something to make this deal happen. Otherwise, I think on every side, we're going to be just sitting quiet, because, if I tell News Corp want to say no. There was a certain deal which SoftBank had proposed. If you were not going to change that, then it would all be the same. So, if you keep doing the same thing, there's nothing different which is going to happen. So I decided with the help of one of our investors from Horizon, who said, Dhruv, I'll back you. We sent an unsolicited term sheet to SoftBank. No permission from anybody. None of our financial investors, not our board, not News Corp, nothing. Only one investor who said, Dhruv, I've got your back. Sorry?
This Anil at Horizon
This is Anil, yeah.
It's all right, okay.
So basically, Anil and I sat down, I remember at the Fullerton Hotel in Singapore, drafted a term sheet, which was completely, what we liked, and sent it to SoftBank. And we immediately got a call back from SoftBank within like 5 hours of it hitting their inbox. Actually, they were quite upset, because it was a very, very egregious term sheet, egregious for them. For us, it was very, very favorable. Frankly, point was that, are you joking with us, right? And I was like, we're not joking. This is serious. You tell us if it doesn't work for you, fine. If it works for you, tell us, right? And frankly, they gave us a number on the phone, which we jumped at. We were like, this is the best thing which could happen. But they said, you got to confirm to us now, because we don't have time. But I had not sought permission from News Corp at all by then. Anyways, to cut a long story short, I made the phone calls. News Corp was very, very quick. And within a few hours, they came back saying, let's move forward. We agree with the terms. And that's how it happened. So I really had to put my neck on the line to get this done. And in the end, look, it finally, worked for us. Not with the lots and lots of challenges as the deal was progressing, but finally, I think we closed on January 10th or something thereabouts in 2017. But I think it was remarkable. Some of our financial investors felt we was, stepping into a, sinking ship, and we might sink alongside that or along with that. Lots and lots of, emotion. You were asking how was the mood, right? I think news finally came on board. Financial investors were sort of unsure. Some were on board. So I had to do a lot of sort of, board management, both in board meetings and outside, to get it over the edge. But I think in the end, I would say that was a real pivotal turning point for the company and its fortunes.
I think sending a unsolicited term sheet just with one investor without informing the board and then closing the deal is what I would call probably a real gangster founder move, man.
Well, in retrospect, it sounds like that, and I always look back as one of those bold moves, which if I hadn't had the courage to make, we would have probably not managed to get the deal done.
Easily, then housing would have gone to one of the other
It
guys.
could have gone to it could have gone to somebody else, and it would have been a completely different sort of movie, which would have played out. It was one of those things which one really, really had to do something out of the ordinary, something different, something ballsy, I would say.
Big time.
Yeah.
And then Vikas, so Dhruv is in Singapore, this happens. Do you pick up the phone and say, what do you mean we've got an offer on the table? Like, how did that happen? Because you have to now make this become real, right?
I think as Dhruv started saying during these 15 months, there were many, many such situations where we were like, now what next? How do we deal with this? So Dhruv and me discussed before we sent out the term sheet. He was in Singapore. He called. He said, "This is what has been discussed. This is the term sheet I want to send out to." So we were in agreement for that when we sent out this term sheet. But I think those 15 months at every stage or at every kind of now and then, we were having surprises all along the way. In fact, we had shareholders litigation in Singapore. We had very, very tough negotiations because, I mean, look at this deal where you have Elevation, Excel, and News Corp on our side. And on the housing side, you have SoftBank, Helion, Nexus, and few more. Everyone sitting in the room, and we were negotiating the deal post we signed up on that term sheet in July. So it was very, very tough. In fact, I was sitting in the room with all these investors and their legal representatives negotiating sometime on both sides because we agreed when we actually signed up for this term sheet. There was an agreement. The CFO for housing.com, Mani Rangarajan, he was also getting involved in running the business. And we said business is very important for us. While we are focused on doing the deal, we want to make sure that the business is protected. So we kind of did that unsaid understanding that Money, you focus on business, let me focus on deal, and we'll sort it out in case there are any disconnects. We'll get aligned. So Money was completely focused on business, and I was trying to kind of negotiate between so many legal reps for all the investors in the room, and then the litigation.
Yeah.
It,
So as Vikas said, look, there were lots of issues going on their side as well, right? On the housing side, because they had their own sort of challenges, lots of stuff. So I think we somehow managed to get past all of that. A lot of things where we made leaps of faith. Lot of things we said fine. We had to speak to people, calm everybody down. You have to remember, housing also had 12 co-founders who all had equity. So it was we literally had to win over everybody. And that happened even before signing, during signing, I mean, between signing and closing, and even post closing. So a lot of hard work. And even after the deal closed in January of 2017, for one full year, we were pretty much parked out of housing's Powai office to make things, come together. But I think in the end, it really worked, well for us. I mean, just to give you a sense, at that point in time, housing barely had any revenues, right? And today it's more than 85 to 90% of our overall revenues. So big sort of turning point for us. And then of course, post the transaction, we also realized that I think, the classifieds business was a platform business, more defensible, more moats around the business, much more easier to create differentiation, more pricing power if we did the right things than a brokerage business where essentially you're a price taker. The developer pays you 2%, they pay you 2%. You can't decide I'm going to charge 5%, right? And sort of very, very competitive space with lots of mom and pops, entering the space. So we realized that the horse to place our bet on was actually housing.com. And that's when sort of an internal pivot also started within the company where we said, you know what, we're going to grow housing a lot more rapidly and put all our investment dollars, whatever that might be, on housing and sort of let sort of PropTiger just follow an organic rate of growth.
I think managing three different brands at the same time would have been the challenge that led to us taking a more concentrated approach with housing. But Dhruv and Vikas, looking back, would you say that the housing acquisition was the right call and the best possible thing for the business?
Oh, I think without a doubt. I mean, I have no sort of qualms. Unequivocally, I can say that I think it was the best thing which happened, for the business.
No, no, I agree. Not only from a business growth perspective, but also even from our people perspective, we could hire the talent. We could scale the business. We could actually pivot the entire organization into a very different organization. While it was very challenging in the very first year, that we were acquiring a company which has a very different culture, headquartered in a very different geography. We are in Gurgaon. They were in Mumbai. That integration and frankly, on a hindsight, those 15 months which we spent negotiating the deal or trying to do the deal helped us mature our understanding in terms of what this business is all about and how we're going to approach the integration once we do the deal. So it actually prepared us a lot more when we actually struck the deal on 9th of January morning. We were literally on the job 10th morning in terms of started integrating the business. So the very first year, in fact, in March, as Dhruv was saying, I still remember the revenue was in early double-digit crores for housing, and in the very first year, 2000, March 2018, it doubled. In fact, more than doubled its revenue. So the integration was so fast. Within 6 months, we were pretty much done with all the key items of the integration. So I think it was a, it was definitely a defining moment for so-called Elara, REA India, or the combined business.
My assumption is that the integration would have gone smoothly because of the heritage of GE, where you have a very straightforward integration plan where redundancies are mapped. Was that a very difficult phase?
So look, one of the things, one of the roles I had at GE when I was there was doing M&A for the specialty materials business. At that time when I used to work for General Electric, overall GE used to do more than 200 acquisitions a year across the company. Small ones, bolt-ons, large ones, whatever it was. Not all were the same size, but plenty. And G Specialty Materials, where I was, that was a business which was basically set up within GE to absorb the Honeywell materials businesses which were coming in up post the planned Honeywell merger, which unfortunately got shot down by regulators and never happened. So the mandate for us was to actually grow the business. So one of the most active parts of G Specialty Materials was the M&A team. And we looked at lots of deals, worked on many deals. And one thing I realized from the GE playbook when I was there at that time was by the time the deal actually closes, you need to have an integration plan ready to execute, to Vikas's point, day zero. Day the deal closes, you have to next morning have people in there doing their stuff with a plan. You need to know, mapped out, that in the combined entity, who's going to get the key roles, who's not going to stay on, where the redundancies are, which brand is going to stay. So everything was mapped out in detail. And we believed at GE that, look, you're going to do many deals. Sometimes you do all the heavy lifting, deal doesn't happen. But that's okay. You only learn from preparing integration plans in place. So to Vikas's point, look, we'd already cut our teeth by doing Makan and doing it successfully in terms of the integration, a few other smaller deals. So we felt that we ourselves, notwithstanding learning from GE, but even ourselves had been through a few acquisitions. So we really felt ready when housing happened, but we had worked really hard over those 15 months when we were sort of dancing with each other to come up with an integration plan so that we had very little challenges in terms of knowing what to do. And I think by having a plan in place, we managed to retain all the good people we wanted to, and the people who we didn't see a fit, they automatically left. And that's how we managed it. So imagine the day the businesses merged, we were about 2,400 people across both sides. Within 2 months, we were down back to 1,400. So that was something which was remarkably done. To avoid, how the media does things at times, right? I mean, 1,000 people fired and this, that. I didn't want any of that to happen either. You had to do it in a gentlemanly fashion, ensuring that everybody who did not have a place was taken care of. We did not want to, come across as brutal. We wanted to do the right things by the people. So I think everybody who stayed back was happy. People who left also left happy, realizing that what we are doing is the right thing. So all that required a lot of hard work. And I have to say that everyone really, really sort of rose to the occasion across the organization to make it happen. And which is why sort of we see housing where it is today. So I think it is one of those cases of a very, very successful M&A deal, because typically we know that M&A success rates are very low, and that happens sometimes because it's done for the wrong reasons. Sometimes it happens because you don't have an integration plan in place. Sometimes you lose sensitivity to people's emotions. So lot of reasons from M&A failure. But I think we had tried our best to check all the boxes. I'm sure we made our mistakes as well. We could have done a better job, obviously, but I think we did a reasonably good job to ensure that the outcome has been good for us.
Fact, on the people emotion side, I think that was one of the important consideration for us, Zaran, when we were actually planning for the integration or quote unquote redundancies, because we were acquiring housing for a reason, and we housing was going through anyways a lot of ups and downs for the last so many quarters. We wanted to make sure that we don't end up acquiring an asset, but people have already left the business. Then what are you acquiring for the business, right? So that was a key consideration for us, and we actually paid a lot of time and attention. As Dhruv said, the moment we did the deal, the entire leadership team from PropTiger immediately went to Bombay, and we camped there for almost 4 5 months. Kept on rotating between Gurgaon and Mumbai, so that we can protect the talent on both sides, identify who is the right fit for the combined business, and also take care of who doesn't have a place in the combined business. So that was the kind of cycle which was, I mean, these redundancies are always difficult, right? But how you play it out is important.
I mean, we over communicated. We held like joint mission values workshops. We told people that there is no housing, no PropTiger. It's not as if the PropTiger team is superior to the housing team. We were all like, look, you know what? We all now together one organization, and now we have to figure out what's the best for the combined organization. And that approach, I think, really helped us. And REA, had of course learned its own lessons, from the iProperty acquisition, and which I think they utilize very well in making this investment work. And I think because of their past experience with iProperty, how they managed that, what went wrong, what went right, I think they were able to drive tremendous success in the business between 2020 and 2024. So I think we had a fantastic partnership, and we did really well in these four years, where I think the business grew at a CAGR of more than 50% plus. And 2025 was a bit of a tough year for us, slower growth, but that was bound to happen because I think the real estate market also slowed down. Then we grew so rapidly that was bound to sort of taper down a little bit, and obviously competition became more I would say active. But the good news is that what we ended up doing was we created alternative revenue streams, which basically took off. So even if we look at the overall business between the time we acquired housing in 2025, I think it's a 60-65% CAGR overall. So so it's a remarkable growth story. And of course, I think I'm very, very hopeful that where the business stands today, I think it is poised for look, 65% CAGR at our scale today is much harder, but I'm still pretty confident that going forward the business can continue to grow at a strong clip because I think post-COVID, real estate has done well overall. I think adoption of digital real estate has gone up significantly in India. Before that, we saw that in the job space, matrimonial space, auto space. Real estate hadn't fully adopted digital the way these sectors had, but post COVID, that changed. Then the real estate sector had been in a downturn since 2013. Whenever it tried to come up, there was the issue of RERA, there was demonetization which happened, then there was the whole NBFC crisis, etc. I think COVID was pretty much the last straw. But there was so much of pent up demand because of all these things that post COVID, we saw a massive boom in residential real estate. So we obviously sort of rode that tailwind really well and grew the business significantly. During COVID, we overinvested. We invested in brand, we invested in audience, we invested in product. We never fired anybody. So we just ran the business as usual and didn't let COVID impact us. I think that really allowed us to scale over the last several years and has put us in a position of strength where today, housing.com is the number one platform in the country in terms of audience, is the number one platform in the country in terms of brand. Overall revenues, again, we are ahead of competition. So I think we are very well positioned, over the next few years to extend our market leadership to become sort of a distant number one. We've seen that in Singapore, we've seen it in Australia, we've seen it in the UK, that in order for you to get disproportionate share of revenues and profits, you have to be a distant number one. So while we are ahead, I don't think we are a distant number one, and we keep fighting for our position even today. So it's not like we've really gone far ahead, but we've just sort of edged competition, just edged ahead of competition, I would say. So I think a lot of work remains to be done, but I believe that we've laid the right foundation for, I think, the company to get into the next sort of phase of growth where we can extend that market leadership I just spoke about.
What a fantastic 15-year journey, huh? 2010 it begins. We're coming out of the iTrust pivot, and today we're talking about market leadership in the digital real estate space. When you reflect, Dhruv, what is something in that journey that keeps you and makes you the most proud?
Whenever you look back, right, over a journey of so many years, right, there are so many events which happen, many turning points which take place, which I've spoken about. But at the end of the day, I think what you take away with you after all these years, I think, are basically relationships and friendships, and the equations you build with people. I mean, look at, Vikas and I worked together for 17 years plus, close to 18, right? Now, these are relationships which just sort of last you for a lifetime. And whenever you meet, you have plenty of things to talk about. So I think for me, the biggest takeaway, has been the fact that I think if your focus is on building the right team, hiring the right people, giving them the resources, and then letting them run and not second guess them at every step, I think that is a recipe for success. And that for me has been the biggest leadership lesson. I think that the team allows you to be vulnerable. I mean, I have never had any qualm standing up in front of my team and saying, look, I don't have all the answers. You guys need to figure it out. So I think that for me has been the most fulfilling thing, is the kind of people I've worked with, and what I've taken away from them, and what I've learned from them. So that I would say is the biggest source of pride and joy as well.
Because what stands out for you?
I mean, that was interesting, sir. And when I made the decision to actually do something very different in terms of setting up this capability center for REA, I never realized that okay, I'm moving out of this business which we started 15 years, 14 years back. So that realization did not happen. But on the last day, the realization happened. And frankly, while you always feel proud of what you've built, the way you've scaled the business, but I think the bigger realization was the culture you build in the business, and as Dhruv mentioned, the people, the team, or the relationship you grow along the way. That's what matters the most. See, the size and scale, the numbers, over a period, these things fades away, but the relationship stays with you forever. Right, the kind of leadership bench you've created or the sense of purpose you create in a business are much more stronger kind of things which you carry with you when you leave something behind. So that was very important reflection for me when I walked out of that business, and I'm very happy that where we left the business was in a much stronger position. to continue to grow in a sustainable manner. And we had the leadership bench. We had a very, very strong team in place who could stand up and take the responsibility, and the business is not dependent on any individual, so to say. So I think these were a few important reflection when I walked out of the business.
So Vikas, you said capability center, but we don't know what that is. So what happened after the RE acquisition, and what is it that you're leading now?
So it's interesting. I think sometime uh, when you keep on doing the same thing, for me, the journey was very, very exciting. Every day we were doing something new, as we just spoke about in the last 90 odd minutes, and it kept us moving. Even post REA acquisition, the journey was pretty exciting. The business was growing very, very fast. We were trying to build the organization to suit to a large enterprise which is listed in Australia, and also our ultimate parent News Corp, which is listed in which is listed in US. So we were trying to reset the company in a very different manner. So that kept us going. But then in late 23, 24, I started realizing that I've been doing this for a long time. And while I'm enjoying what I'm doing, but should I try doing something else just to keep my learning going? Or am I getting too complacent, keep on doing the same job? So that was the feeling which kicked in, frankly, which pushed me hard to start exploring what I can do next. And that's when the discussion happened. REA was looking at setting up a capability center here in India, building tech capabilities in India to tap into our talent pool, vibrant talent pool in India. And they were in very initial stages, and they said, "Why don't you lead that for us? Because anyways, you're thinking of doing something else." So I had that discussion with Dhruv. I had that discussion with some of my peers in Australia, and that's when they came back and said, "Why don't you do this?" And I said, "This sounds very interesting, not for any other reason, but for I'm going to be doing something which I've never done it in the past. So it's going to challenge me a lot more, and probably I'm going to learn something new." So that's how I took that punt and moved into this.
Congratulations, man! What a journey, yeah? From managing finance and Grant Thornton to joining Dhruv to seeing over $200 million raised to all the acquisitions to now leading the GCC of one of the most respected organizations in our country. That's phenomenal. Dhruv, I read your LinkedIn post, and I think after 14 years, you announced that you're looking to do something else. Two things. One is, tell me, what did it feel like to say goodbye to your baby? And tell us about the new one.
Well, I'm not a very emotional person. So for me, I always believe that you use the analogy of a baby, right? So as you see with your own kids, they grow up, they go to college, and that's it. They're gone, right? So no point in sort of latching on to them. And you just look at the journey and their sort of growth with pride and as a proud parent, just sort of move on. So I think it was a similar thing. I felt that we had built a great organization. We had achieved lots of things together. We had the right team in place to take it to the next level, and I just felt that the organization would benefit from some new ideas, new thoughts. And I frankly, wanted to do something very different and something which I had become very passionate about over the last few years. I used to be very, very overweight, and I went through my own health transformation journey about 4 years ago, where I came down from like about 152 kilos down to about 79 kilos. And that was a game changer for me from a health standpoint, from a professional productivity standpoint, being present with the family. I mean, there's a complete transformation, not just of my health, but as who I was as an individual as well. And I felt that during the journey, as I was working on myself, I realized, there were lots and lots of things which I could have had more support in doing it, right? Which I didn't have. So I had to do a lot of reading, a lot of hacking on my own. And not everybody wants to put in that effort. I put in that effort because I was determined to do it, but not everybody can do that. So I was like, can I build something which will actually make the journey for people easier? And it's not just about weight loss. It could be about anything to do with health and nutrition. And that's when I said, look, I think it's time I build something which will create some impact, something which I think taps on behavioral science. It taps on AI. What I'm planning to build, I couldn't have built 3 years ago, but I can today with where AI is, and I think which can create impact and something I'll have fun doing. As always, because you should stop doing things when you stop having fun, no matter what age you are at. At this age, with God's grace, I'm in a position where I can sort of decide what I want to do and do it because I enjoy it and not because I have to do it. And that's sort of the passion I'm bringing to my new startup. So we'll definitely come back. I'll definitely come back, Zaran, on a future podcast talking more about what I'm building. Hopefully, when I can reveal what I built, and hopefully things go well. But again, as I said, for me, the goal of making it successful is so that it can actually impact more people. So if like someone asked me that, look, you know what, if you're just going to do it as a passion project, if you're going to do it as a something for impact, how do you ensure business success? Because you won't be focused as much on business success. I said, no, the way I look at it is very different. I'm like, my goal is that the product I build impacts a large number of people. And if I don't build a successful model around it, business model, unfortunately, the scope and scale of impact will be smaller. So the only way to do it is to build a successful business. So look, I feel like, day zero all over again. I'm back to being what I was, 15, 16 years ago, doing a lot of stuff myself, which I had stopped doing a few years ago here at REA. So yeah, super excited. And as I said, we'll talk more about it when I'm back with you next time.
As an investor and more importantly, an avid customer in this space, please, if there's a waitlist, sign me up.
Sure. I look forward to that. Thank you.
All right. I know you have a hard stop. Dhruv, thank you so much. Vikas, thank you so much. This has been fascinating. There was so much more we could talk about. There's Fast Fox. There was the actual acquisition of REA. We can always do that again. But so for now, my gratitude to you for spending time with us today.
No, thanks, Aaron and Vikas. See you soon.
Thanks, Aaron. It was lovely talking to you, and reflection was absolutely great. Sometimes you don't realize it. When you go over this journey, it feels like, wow, what a journey.
Yeah, you guys weren't easy to prepare for, let me tell you.
Thanks a lot, Jaran. Thank you.
All the best.